What is going on, investors? Hopefully you guys are doing well out there. It was a gigantic week for news, not only in the stock market, but we had the presidential elections and we had a big result. In fact, we are seeing stocks move at an epic rate, including Tesla, which hitched its wagon to the once former president and now president-elect Donald Trump. You won't believe the share price that Tesla achieved this week and the valuation. And so, folks, it is time to jump on the Trump train and get the FAANG Stock Recap Show going here on the Investor Channel, where every Friday we recap all the major news and the technical chart patterns from all the major FAANG stocks. And we better kick things off like we always do with Meta Platforms. Start of the week at 559, and basically like every single stock in the stock market, this thing was up, and it was up big, up over 5%. Finished the week at 589 and some change. This is after some hyperscaler CapEx estimates came in from Morgan Stanley for 2025. We're expecting CapEx of about $300 billion, led by Amazon, also Google and Microsoft. These companies combined, I think, to spend just under that in 2025. Typically, though, when I see these forecasts this early, they tend to be a little underestimated. And certainly, I think in a deregulated environment, certainly if you can get corporate tax rates to continue to either certainly stay where they're at, I don't think there's any doubt about that, but they might drop even more. You actually might see further investment inside of that space. Obviously good for semiconductors. Now, Meta's former Orion chief joined OpenAI to lead its robotic efforts. Talk a little bit maybe more about that when we get to the Microsoft segment, but the Orion glasses are actually these, I think, pretty cool prototypes that Meta showed off. Now, it's not a final product. It's not a product that you can buy, but this is the form factor that the company is aiming for to get away from kind of those VR glasses. And speaking of those VR glasses, the company has seen the sales just not meet the expectations. In fact, they just shuttered a VR studio and they're cutting funding for some third-party developers. And I think they're going to pour more of their money and efforts into a slimmer form factor and probably something that is less focused on gaming and more on notifications. Now, Baidu jumping in the mix as well. We'll talk about Apple here in a moment, as they're going to unveil their own AI smart glasses. Now, I think the question that we have to wonder as investors is, are these AI smart glasses, whatever you want to call them, is it going to turn into the iPhone? If that's the case, then even at $500 some odd per share for Meta, that is going to be a bargain. What if this turns into the iWatch? Well, I think it'll be incrementally better for Meta, and as long as their ad business continues to do well, it certainly could continue to move the stock higher. But if this turns out to be Fitbit, which a lot of you don't remember, but at one time, a company like Fitbit was viewed as maybe a revolutionary, quote, wearable device, connected fitness, those types of things. Well, this will be a massive flop and actually won't do much for the stock price. Moving on to Apple, start of the week at about $220 per share, up modestly considering the moves that we saw in the stock market, up about 3% the finished week at 220, we'll call that 227. Now, Apple and other hardware companies face risk for Mr. Donald Trump, President Donald Trump, tariffs. Now, I will do a video here relatively soon. We'll call it MAGA money. We'll talk about Trump's agenda. Now, we are not going to be talking about his social agenda, any type of thing that a lot of people are upset about him. I can understand people don't like Donald Trump. They don't like his personality. They don't like him from his social policies, immigration policies, pro-life, pro-choice policies. There's a lot of reasons not to support Donald Trump. I get it. I understand it. I have family members. I have friends that didn't vote for him, don't want to vote for him, are sad that he won. But the reality is, folks, is this is the Investor Channel. For the next 2 years, he is certainly going to be president. He's going to be president for the next 4 years. But for the next 2 years, there'll be no impeachment proceedings. In fact, he has control of both the Senate and the House of Representatives. He's going to be able to pass basically whatever he wants as it relates to deregulation, tax cuts, and tariffs. And as an investor, that is where you need to be focused. And if you're not focused there, then I would unsubscribe to the channel. I would put your money into ETFs and let big boys that can make those decisions for you. Now, Tim Cook and other leaders are putting their personal differences behind them, and they congratulated Trump on his victory. I also saw Andy Jassy and Jeff Bezos very quickly, in fact, not only supported the president, but followed him on social media as well. Now, Apple is eyeing the smart glass market as the great Mr. Steve Jobs is probably rolling over in his grave, so to speak, as they are going to begin an internal study on existing products. This is according to a report. Now, if Steve Jobs was there, folks, they would already have prototypes and they might even have a product on the market. But the thing is, Apple has blown up into this $3.4 trillion bureaucracy, and they move at a snail's pace. Instead of doing internal studies on in existing products, this company should be innovating and already have a product out on the market, or at least in prototype phase. Some people might say that is the Vision Pro. Now, the company is proposing a $10 million investment to comply with that Indonesia rule, which we talked about on last week's show, where Indonesia, which is one of the most popular countries in the world, they plan to ban sales of the iPhone. That is because the device doesn't contain at least 40% of locally manufactured parts. So Apple's saying that's probably a no-go, at least in the shorter term, probably even the longer term. It's tough to make 40% of an iPhone inside the country of Indonesia. Well, they're proposing a $10 million investment. And that's what these politicians do, folks. They extract the money out of these wealthy companies. And if I was Indonesia and I was their citizens, I wouldn't blame them one bit. Now, Apple is reportedly in talks with Foxconn to build AI servers, not with Super Microcomputer, but actually with Foxconn. That is in the great country of Taiwan. We'll see if that materializes. Moving on to Amazon, start of the week at 196. And speaking of moving, we were up 6% on this one. Boom, all the way up to $208 per share. We might even eclipsed a 52-week high on this one, up over $212 per share. You're going to want to see that technically. Now, here's the thing about the former president now becoming the new president is he runs on a big deregulation type platform. So if you're one of these companies like Amazon, and you've got these delivery drones, which require Federal Aviation Administration approval, and anytime you're trying to get federal approval for something, well, it can take a long time. It can take a long process, lots of money, lots of waiting. Well, if you deregulate Washington, well, these new drones will take off a lot faster. Now, I understand there's a safety perspective. There's all those types of things, privacy, all those things need to be taken into account. But again, we have to deal with reality as investors. The reality is Donald Trump ran on deregulation and lower taxes. He won. He won soundly. He won decisively. He also won full control of the Senate and the House of Representatives, meaning if he wants to deregulate and maybe even get rid of parts of the Federal Aviation Commission or make them work a heck of a lot faster, well, that's something that could be done. Now, Amazon is going to remain committed to a nuclear energy deal with Talon Energy. They signed this deal, but it was voted against by the Federal Energy Regulating Commission. So I'll ask you again, for a president running on energy independence, running on deregulation, I think the odds of Amazon having a nuclear deal rejected by the Federal Energy Regulation Commission will probably have that person fired. And so these types of deals will start to sail right through. Now, Amazon is looking at making additional investment in Anthropic, another thing that could come under the ire of DOJ, SEC, those types of investigations, those types of scrutiny. But now these deals, I don't think will get that scrutiny. And Amazon has already spent about $4 billion investing in the AI company. And during the conference call, they see AI growing faster at this stage than AWS. So they'll continue to make those investments in Anthropic. Moving on to Netflix, start of the week at $7.53. Company benefits almost negligibly, maybe from a corporate tax rate a decline, certainly. And if you drop the corporate tax rate by about 5%, well, you better price it in. And that's what happened with Netflix, up to about $7.95. Unfortunately, though, the company's offices were raided. This is a harsh headline, but for tax fraud, at least on an investigation, when I think of a raid here in the United States, man, they got those things drawn and they're going in, maybe a smoke bomb or two. I don't know if that's the case in Paris, but this sounds probably harsher than it'll be. Again, these countries trying to extract money from the companies that have it. And I certainly don't blame them. Moving on to Nvidia, start of the week at 136 and boom, up 8%. I tell you what, if you're overweight Nvidia, overweight Tesla, well, you slimmed down a little bit and your bank account got a lot fatter as those companies skyrocketed. Nvidia up 8% this week to finish the week at 147 and some change. This is after Taiwan Semiconductor basically indicating where the earnings and revenue are going to come in for the semiconductor industry over the next couple of months as their October revenue soared 29%. I think this is 3 months in a row you've grown revenues by about 30%. Year over year, just more and more revenue coming from Taiwan. I heard some commentary based on China invading Taiwan. The idea is that that will certainly get tamped down, at least according to the experts that I listen to, and that you have less China risk as it relates to Taiwan going forward, although those things can change, obviously, and we hope they don't from a people and population perspective. Now, Nvidia is going to limit game streaming time on its GeForce Now service. If you're not a serious gamer like myself, which can't remember the last time I played video games outside of maybe casually playing one with my son, GeForce Now is basically kind of a streaming gaming platform where you get access to computing power basically through the power of the internet, if you will. And it's a relatively minor part of Nvidia's business, but my guess it takes a lot of computing power in order to deliver the game, especially the type of games people are playing where there's lots of scenes and lots of action. And so instead of raising prices, they decide to limit streaming time. My guess is you could maybe unlock that streaming time with maybe paying more. Now, Qualcomm jumped this week as Wall Street is pleased with its smartphone progress. If you want a full dive into Qualcomm's earnings, be sure to tune into the Semiconductor Show later this weekend. We'll also talk about ARM Holdings, which reported their earnings as well. Shares kind of climbed and then dropped on the news. You want to look at that one technically as well, maybe not even wait for this weekend show. Here's another indication that Nvidia's business is absolutely flying off the hook. I think they report earnings in about 12 days or so about 2 weeks from now. Nvidia is asking SK Hynix to advance its supply of high bandwidth 4, which is the next generation of high bandwidth memory. High bandwidth memory surrounds the Nvidia GPU on every Blackwell or H100 device. In fact, as you can imagine, each generation comes out, there's more and more high bandwidth memory. And this high bandwidth memory is likely going to accelerate the next version of Blackwell. And Nvidia says, hey, get to work. And we want to accelerate that by about 6 months, probably hoping for maybe a 2 or 3 month improvement. Now, Nvidia is moving, unfortunately, some super micro orders away from the supplier as it continues to be embattled with different types of accounting irregularities and its auditor resigning. And that is to maintain supply chain stability. Certainly when we hear from Dell later this month, we'll see if there's any commentary there. We'll talk more about Supermicro on the Semiconductor Show. Now, Perplexity, which is an AI search engine trying to compete a little bit with Google, probably OpenAI with a little bit as well. They reached a $9 billion valuation. The reason why I tossed this in here is the fact that you're getting these incrementally higher and higher valuation. In fact, the company's valuation earlier this year was just $1 billion. Now it's $9 billion. That just being located where I am, like right next to Silicon Valley, this is going to spur like 900 million other startups to want to do the same thing. When they see these types of valuation, they see the venture money flowing into it. Well, Perplexity is going to see a lot of other competition come to market because of the valuation increase. Moving on to Google, start of the week at 168, boom, up 6%. As potentially, again, lower corporate tax rate, which is what Donald Trump ran on and I think will almost assuredly pass. And certainly it was in stark contrast to Vice President Harris, who we commend on her campaign and under the tough circumstances that she had to run, did a fantastic job putting together a campaign and a viable alternative to the president after Joe Biden was basically pushed aside or stepped aside. She was running, though, on a higher corporate tax rate. And so with the guarantee almost of at least corporate tax rates remaining the same, if not lower, wildly profitable companies like Google are going to price that action in this year, as next year you'll probably see a lift by probably at least 4 or 5% on lower taxes. The company also is battling the government in a lot of ways when it comes to different types of regulation. Now, because Google donates a lot of money and donated a lot of money, in fact, I think they were the top donor to the Democrat Party, will the current or the former president that will be the future president here in a moment, will he have a grudge against Google? Wouldn't surprise me. Donald Trump holds a grudge like no other, but it could be with deregulation, it could alleviate some of the pressures that Google has found themselves in as it relates to regulation. And that could be a good news for the company. Otherwise, there wasn't a lot of news that drove shares up 6%. Moving on to Microsoft, start of the week at 406. Up about 4%, finished the week at 422 and some change. Now, we talked about this during the Meta segment, but the Orion chief, which is those kind of slightly wider glasses than I am wearing, he has moved to OpenAI to lead its robotics efforts. We are going to talk about a lot about robotics as we move into the next year. I know it's something that I've talked about over the past year when I was at Brownstone Research. They constantly wanted you to talk about kind of the next thing. Robotics is certainly there. From an investment standpoint, there's not a lot of companies out there doing a lot. We'll talk about Tesla here in a moment. OpenAI, Microsoft, I think are going to be doing some interesting things. Nvidia as well. You could look at full self-driving, Waymo, Tesla. They're certainly doing those things. And in a lower regulatory environment, you might see faster adoption, faster acceleration, faster testing of those types of things. Now, OpenAI is said to be in early talks with regulators to become a for-profit business. Again, I keep beating a dead horse, but here's where we are. We're at stark contrast with the current administration, at least when it comes to regulation. You had a heavy-handed regulating government under President Biden, and I'm not saying that's a good thing or a bad thing. I'm saying that's the reality. As an investor, you've got to start focusing on reality. The reality is MAGA, President Trump, Congress, Senate. That's the reality. And again, if you can't deal with that, you're not an investor. You're a social justice warrior or you're something else. And that is totally fine. And society needs those types of people. But we're not here to be social justice warriors. We're here to increase our bank accounts and increase our odds of our success and our family's success. OpenAI, in talk with regulators, might have gone differently under the Biden administration. Under the Trump administration, it might sail right through. Now, the stock of the freaking month, maybe even the next 4 years, is Tesla. And Elon Musk, it's going to go down as one of the biggest risk takers that we've ever seen. And I think out of all the risk he's ever taken, putting his last dollar of the PayPal money into Tesla, doing all kinds of risky things as it relates to Tesla to build the business and the company into what it is today. You could talk about Starlink, the other businesses that he runs, but I would say one of the biggest gambles that he took was hitching his wagon to Donald J. Trump. Because if Trump was not elected, Elon Musk as a person, as an individual, not only owning X or Twitter at this point, was going to become under fire. In fact, I saw an interview, I think it was maybe Tucker Carlson was interviewing. I only saw kind of a snippet on social media, but Tucker legitimately asked him, like, was he preparing to go to jail if the vice president was elected? Now, I think some of that is hyperbole. Some of that is probably a little too hyped up. Both sides are guilty of that, but there might be a little bit of truth in there. At least some headaches would have came. And now that Donald J. Trump is in office, guys, presidents and elections matter, because look at Tesla stock this week. Don't let anybody convince you who's in office and who gets elected doesn't matter, because it mattered big time for Tesla, up 34% in a week. That is absolutely extraordinary. It has turned the year-to-date gain to 29% on Tesla. We have soared to a over $1 trillion valuation, giving it more value than the next 10 biggest auto stocks combined. Now, Tesla, in order to grow into this $1 trillion valuation, it needs its full self-driving. It needs its robotics business to really catch fire. But with itself hitching itself to the president, you got to imagine Elon Musk is going to get again, this is whether you like it or not. I am not arguing whether Elon Musk being friends with the president gets him any special treatment. I am not arguing if that's a good thing or a bad thing. What I am arguing is that is what's going to happen. If that makes you upset, I don't care. Elon Musk is going to get special treatment, and Wall Street showed you that with the stock being up 35% in a freaking week on basically no news other than Cybertruck leases start at $999 a month. And I would have one in my driveway if it wasn't for the fact that I literally got laid off the day Tesla emailed me and was like, you can pick up your Cybertruck or configure your Cybertruck. It was literally the day after I had gotten kind of my layoff notice. And I was like, maybe I shouldn't buy $100,000 truck. And maybe the bank would not loan me $100,000 to buy a pickup truck. So I'm waiting for another day, but I'll probably lease one, honestly. Now, Tesla won a patent that could lead to licensing of its autonomous driving. It's something that Elon Musk talked about on the conference call, but you need Tesla to get its own full self-driving and autonomous driving basically approved. And again, with the president in office and basically in control, a lot of the regulatory bodies that control regulation around autonomous driving, you better believe that Tesla's full self-driving plans, whether the software is perfect or not, and I have full self-driving on one of my Teslas, it is not perfect, but I guarantee you it will get approval in the United States as soon as January when President Trump is elected again, like it or not. Now, moving over to technical segment of the show, we have just blasted off to new highs. Now, I'm not convinced this is all Trump, but some of it has to do with the tax breaks for corporates being priced in. Some of it has to do with the fact that you do have some segments of the stock market that absolutely benefit from Donald J. Trump getting moved back into the office. Again, I'll have a separate video as it relates to this. There is going to be some industries that are not going to benefit, and we'll talk about that. But the S&P 500 powering to new highs. Any dip in the stock market should be bought. Now, moving over to Meta, we should be reaching some overhead resistance with Meta. All-time highs up here at 600, higher high from a technical perspective. Pullbacks in Meta. I'm going to sound like a broken record. Pullbacks in Meta should be bought. Apple is not confirmed really decisively a new higher high, but in my opinion, it's close enough. Again, pullbacks in Apple should be bought. Amazon powering to a new higher high. In fact, we're here at the middle of the channel, should reach some resistance there. Some people will argue, oh, if President Trump does tariffs and those types of things, it would negatively impact the Chinese goods that get predominantly sold on sites like Amazon, certainly Walmart as well. I have an argument that counters that a little bit. I'll save it for another time. Pullbacks in Amazon should be bought. Netflix up here at $800 per share. I was talking to somebody that owns Netflix today. They were like, what do I do? I was like, I think you hold it. There are areas here where you do stop losses. Pullbacks in Netflix should be bought, but we're way away from that. Nvidia has just confirmed a new higher high, continues to move higher. This is the last of this group that will report earnings. It'll do that likely on Wednesday, the 20th. I'm expecting stellar earnings and stellar guidance based on TSM's reports, based on Qualcomm, based on basically everybody else's guidance other than Supermicro has been pretty darn good. Google looks like it wants to walk itself up to make a higher high, meaning you still probably have $20 in upside on this one. Needless to say, broken record. Might as well create an AI version of pullbacks should be bought. Microsoft's not as decisive, at least we're talking about the micro trend. We're still making a series of lower highs, but it's not being confirmed by lower lows. This one's still in an uptrend. You could actually buy this one as well. And my God, I haven't even looked at this technically. I've just seen it go up. I have a sizable position in Tesla. I was very concerned if President Trump did not win. And it's not the reason why Donald Trump is intriguing. I don't care if this stock goes up or down, but I was pretty confident if the former president got reelected, basically. I wasn't expecting this type of move. We've moved into a zone where you can sell. Somebody did ask me, did I sell Tesla shares? I had two positions in Tesla. One was a shorter term position. Yes, I did sell that one. Not at the highs that we saw today. Unfortunately, I didn't hold on for this last 8%. I thought that might have expired itself when it got to here to about 309. So I sold there, but I have a longer term position in Tesla, which I basically ignore. It's a rather sizable position. It's based on the fact that if they get the robotics and full self-driving, more or less the robotics right, well, this is way more than $1 trillion company. And at the time and areas that I've accumulated Tesla, I'm up pretty sizably on that investment, at least at the current day's prices. So that is not an investment I plan to sell. I encourage you to have long-term and short-term views, and it could actually be on the same stock, because if you follow Tesla closely enough, you can capture some short-term gains. In fact, upwards of 30% just this week. but have a long-term portfolio that you basically forget the password to, and you basically never log into it, and you wake up an old man one day and you cash out. Folks, that was the FAANG Stock Recap Show for Friday, November 8th. The reality is, folks, I don't care about your social views. I don't care if you're pro-life or pro-choice. The truth is, and the facts of the matter is, President Donald J. Trump is back in the White House. He ran on a very clear, crystal clear agenda as it relates to investing. If you've chosen to ignore it, now's the time to brush up. I will do a video on it. I can critically analyze the former president. Just because I have a hat of his doesn't mean I agree with everything that he does. I also don't agree with a lot of the discussions that I'm hearing around tariffs. A lot of the people telling you about tariffs told you that this was Hitler and whatever dictator in the past. That may or may not be true, but at the bottom line is your stock portfolio can benefit if you do the right things and you stay focused on what needs to be focused on. And that is reality. And the reality is Donald J. Trump is your president, whether you like it or not. That was the FAANG Stock Recap Show for Friday, November 8th. Have a fun and safe weekend. We'll be back next week. Good luck with your investments.